Welcome back to the Future Show here on the TD Ameritrade Network. We're just 60 minutes away from the cash open here in the U.S. And as we get set to begin another trading week, the U.S. dollar is attracting some attention, inching higher last week, back to the 98 handle and to within reach of that 2019 high posted earlier this month. I'd like to welcome in our next guest. We have Chris Gersch. He's the Director of Strategy at Bell Curve Capital. Chris, it's good to have you on the Future Show. The indices seem to have taken a step back as rates fell, potentially too much too fast for them to stomach. Does the strong U.S. dollar also have investors taking a step back as well?
Yeah, really the strong dollar has everyone on a little bit of a pause, especially the fact that Bundesbank came out earlier this morning and predicted potentially another third quarter downtick as far as we could have negative growth in Germany. And that has the market spooked a little bit just on a global growth story.
Chris, a big part of the dollar strength comes from euro weakness. Any indication, any hint that the conditions that will have started to turn? I mean, I saw that CPI came in below expectations this morning as well.
Yeah, CPI is weaker than expected, and a lot of talk on our desk is that we're going to see a 109, 108 handle within a couple of weeks. I think a lot of the momentum is to that downside.
The German economy has contracted in 2 of the past 3 quarters, and Q3 is, at this point, not necessarily off to a promising start. Are you seeing the same?
We're seeing a lot of the same thing, and ultimately, you talked about it a little bit earlier, just a pullback in some of the commodities. We're seeing overall weakness, and really the momentum, especially on the moving average 20 over 50 day, it's hitting some key pivot points, and that's why we're predicting a 109 handle within the next 10 trading sessions.
Chris, can you talk to us about, in terms of any details you're hearing in terms of Germany preparing stimulus measures as contingency for a crisis? Any details yet?
Really, that news just came out today. I'm sure you're monitoring the tweets just as we are. But ultimately, yes, there's a contingency plan being put together by the German government if there was to be a downtick. And ultimately, they're preparing, as you had said, a contingency if a critical amount of selling happens and ultimately weakness falling out. We see if that 108.60, 108.70 area of accumulation does not hold, we could see a 105 handle, and that sort of movement, you're going to see the German government step in with some stimulus. All
right, it's definitely something to watch there. In addition to that, one thing I heard about over the weekend, Chris, was this Brexit document leak where they basically talked about a worst case scenario. But, I'm also hearing that downplayed a little bit for the most part. For one, because they've made some changes since that document was prepared, apparently, in terms of contingencies, as we were just talking about, or worst case scenarios. And I guess I'm wondering how significant this is. I mean, they were talking about, again, basically some of the fear mongering that we've heard before of prescription drugs prices increasing and all kinds of issues with travel and so on. What are you hearing in terms of the latest there?
Yeah, really, we haven't seen the follow through. If it was the case, we didn't see anything happen in the pound that we would have ultimately been able to emphasize that this was nothing. This was really more of a political play. The Sunday talk shows were all abuzz about it, but we didn't see the follow through on the open last night.
Noted. Chris, one thing I keep thinking about whenever I think about the trade war is many were very skeptical when at first it was just kind of a trade skirmish or sort of discussions. People are saying the same thing about the potential for a currency war at this point, that it's just kind of, again, a skirmish, and that the yuan dropping below a key level is not necessarily something to be too concerned about. How much are you keeping an eye on the currency kind of back and forth right now and potential for it to escalate at this point?
We're definitely watching it. I think that the outlier is if Powell blinks at all to some of Trump's rhetoric, and ultimately, if there is any capitulation by the Fed, I think ultimately what you're going to see is some really volatile days. But until Powell comes out and hints at anything, then staying the course, I think we're going to just stay within a range. We're going to have some moves, but nothing dramatic, unless you're in Argentina, of course.
Noted. Talk to us about what you're seeing in terms of Argentina and some of the emerging currencies.
Yep. Obviously, in Argentina, anytime you have a pullback of 30% on their open market, I understand that they have a much lower float than many of the developed economies. But any sort of, when you have such a liberal left-wing candidate take a stronghold and hint at easing, which they constantly do, I think ultimately that's a level of concern. And if Argentina, I know it's happened before, but these dramatic moves tend to leach into the opposing countries where they have a great trade relationship with. And if South America goes, you're going to see a dramatic effect, I think, on the dollar. It's not going, it's much more of a symbiotic relationship than it ever was. Yeah,
not necessarily tick for tick, but certainly we're pulling a dollar chart here. We can see this is one of the factors that's helped lift the dollar. Let's talk a little bit about central bank activity. We had a cut from Mexico last week, but for the next couple weeks, looks kind of quiet. What are you going to have your eye on? Is it just economic data as it plays out here, or obviously the FOMC minutes and Jackson Hole this week as well?
Yeah, the FOMC minutes, and ultimately, I think the Fed really needs a good excuse. If we stay range bound here with the S&P, and the VIX is staying, below 30, I think ultimately they're going to stay the course. I don't think they're going to have anything really to go on to deviate beyond a couple tweets here and there. But that being said, I'm really looking towards the S&P. If the S&P can hold within a 70 to 100 handle range, I think that we're going to stay the same. I think if there's any dip below, call it a 2650 level, then ultimately I think the Fed is going to have some aggressive rhetoric coming out, and ultimately I think we're going to see a cut sooner than later.
Chris, one more question, then we'll let you get on with your day. Rates to the downside, to the magnitude and to the extent that we've seen, what are they telling us?
Yeah, just the magnitude. I think ultimately a half-point cut. Like I said, if you do see a pullback and you see that 26 handle pop up, but ultimately we're going to have quarter points here from here on out if we stay within this range.
All right, something to watch. Really appreciate it, and we look forward to having you back. Traders, that's Chris Gersch. He's the Director of Strategy at Bell Curve Capital, joining us to talk currencies. I want to take a look at